Good morning, traders. Oh, good afternoon, actually. It's Mark here from Day Trading Room. Time is just after midday on Tuesday, the 26th of April. Hope you had an enjoyable Easter weekend. Yesterday was a bank holiday in the UK and Europe, not so in the US, but I was here trading a couple of trades. Literally, when it's a day like that, and I know that the volume's going to be low, and I'm not expecting much of action. The main priority for me is to stay out of trouble. I just don't want to get caught in anything that I shouldn't be. Bearing that in mind, I'm just literally waiting for a trade to jump out at me and take it. And if I can make one good trade on a day like that, then I'm more than happy. More than happy. In fact, you should be more than happy with one good trade every day. Every trade counts. Every trade should have the same care taken to it. I know it's a fact that actually, when you get a bit caught up in it, uh, you start rushing things a little bit. That's human nature, but it does help to bring ourselves back and say, actually, if we just make one good trade at a time, then things will fall into place. So anyway, great trade for me on the Dow. Two on oil and one on the Dow. May as well talk through them all. Got a 100 tick chart here again. Yeah, so we just started plodding lower really, and it was just drifting around. I didn't think there was much going on. There's more excitement over on oil, so I was watching that rather than the Dow. But we got this situation. I mean, this is a nice setup. You can't not take this really. It wasn't quite in my window of opportunity, but let's just bring the Dow cash in here. Drove down to yesterday's low, the prior day's low. Sorry, that's Thursday because obviously Friday was a bank holiday. On the first push, and then we just got one more little push under. And if I can show you that on the 1 minute here, let me drag that wider. There was the low. We just got a one more little push under, and we just got this nice little pop in volume. Ticks nice and low. The opening drive, it come quite, from the open, should I say? It come reasonably long way, considering the sort of strength of the day. And yeah, you know what? I took that, and actually, I got the low of the day to pretty much 2 or 3 ticks. Um, saw the volume coming in, looked a little bit retailish, saw it stop dead on the tape. Realised obviously that we're at the Thursday's low on the Dow. We just poked underneath it. Actually, what did we go to? 12,446, and it was 12,448 on the cash, so 2 points underneath it. That's the sort of break you can expect on a quiet day. That's the sort of break you can expect. Now, obviously, that's not. I've still got a little bit of caution here. I am aware that we could just continue lower. These are the days that you have got to be careful of, because if there's no opposing volume, all it takes is for one or two institutions to be interested to then drive it lower and lower. So yeah, obviously managing risk as always, but once I've got the little pop up, here's the 100 tick chart. I can't show the entry because the scales up there, but right down in this candle here, lovely little entry. It popped up and I just took some out on the first pop up, just because the type of day it was. I wasn't confident that I'd got anything bottom there, and there was potential for it to perhaps go another 10 points under on one more push. The time wasn't in my window of opportunity, the midday New York time that I like. So, and ticks hadn't gone up to minus 1,000. I would have preferred that, but I'll take it. I was taking it, and but being very very cautious with scaling out on the pop up. So scaled out there, scaled out at 10 as we lifted up here, and then just held the rest. And I was looking, and actually this was a bit of a mistake on my part. When it started to counter trend push like that, let's bring the 1 minute back in again. When it started to sort of break that downtrend line, if you like, I hadn't drawn it in, but obviously you can see it there visually. It's working, and it started to see a bit of strength. We started to get that little lower, higher low. Then the VWAP was the obvious target. And at that point, we were 12,416. I think it was 12,417, something like that, about the time. So yeah, 12,417. So that was going to be the target, and I actually put an order in there and said, you know what, let's leave this now. There's potential to get a nice trade out of this. It's risk-free, taking most of it off. Got a little runner left on. Why not? But in actual fact, this is not good trading actually. But as soon as I got that high tick reading there, I took it out. I saw that high tick reading there, and I thought, do I want to be sitting here? And in reality, you sort of said, yes, I do want to be sitting here. I've caught the bottom of the move. There is a reversal happening now. You've got a nice cushion. It's no risk. You've taken something out the market. Why not drag your stop up to below that low there, and stop to break even? So it's a profitable trade no matter what. But I didn't. I saw that high tick, and I'm so used to taking stuff out on high ticks or low ticks of the day. It was a bit of an impulse, really. I saw it and took it out, and I'm a bit disappointed. If I'm honest, I'm disappointed. Should have run that to the VWAP as the plan suggested. So yeah, bad. No gold star for me on that one. That was poorly executed. But a great entry, a great read. As I say, I let the market tell me when there was a trade on that one. Great read, but disappointed that I didn't run that as to the plans. Okay, so let's bring in crude oil. I hope you can see this. Two trades on crude oil. Doesn't look like much. Wasn't much. 10 ticks. Literally, the drive lower here from the open, which was. Let me scroll back for you. Here was the open. Good drive lower. Then we just started picking up steam. This is the 100 tick chart. Then for clarity, pulled back. 10, 14 ticks or so. Got that just spot on. Just saw the tape turn. Just saw the little retail push it up. Then just saw the sellers start to go high offer. And just rolled down. Just took 10 out of it. That's the way I'm trading crude at the moment. Because I'm aware that a lot of the time when it pushes to lows, it pops back. Even if it does continue, it pops back. And I'm not risking 20, 30 cents in crude. With the size of the position, I'd rather just take the first impulse move. So as before, rather than before when I was trading, I would look for that runner and we were getting some nice 50, 60 cent moves. Because of the nature of the position, I think if I with double bottoms or double tops, then there's a possibility for that. But I'm really just happy to look for that high probability setup, that first little retracement, looking then for the tape to continue in my direction. All in, all out, 10 ticks target, about a 4 to 6 tick risk. Literally, it's tape read. If I'm reading it correctly, I'm right, and it's going instantly. If it's not, I'm wrong, and I just want to be out. I'd go even a tighter stop than that if I could, but sometimes there's a little bit of noise, even at turning points. All it takes is a couple of guys to take a few levels of offer when you're out. So 4 to 6 tick risk, literally, as I say, very tight stop, trading on momentum, looking for that little pullback, and great little trade that. Okay, in the scheme of things, when you look at the whole chart, it doesn't look that great, but continuation trades are great, high probability. There is other high probability setups starting on oil, and that is when you get this low drive, if you get a pause after we've taken out a significant low or high, often you get a 6 or 7 tick just pop back up and more. So that was literally all that was. It was, we just broke lower. We just couldn't break lower, should I say. I think actually the entry was on this candle here because it broke the low, but I've moved it there because you can't see it because of the scaling. But we broke lower, held, and I thought, okay, well that's okay. I can go in a couple of ticks off the low there. Risk is a couple of ticks, and I got a pop up, and I think it was 6 or 7 ticks. So, but as I say, small size, just testing this little theory out. It's interesting, look at that. That's the same sort of scenario. Break to a new low, but the pause, the knot doesn't continue after. Then you get the snap back up. It's happening quite a lot. Obviously, you got to make sure you're steering clear of these drives. But yeah, something to look out for. Something I'm watching and just taking the number one thing. You can get everything else wrong, but if you manage your risk, then things will fall into line eventually. Please just manage your risk. Okay, good trading, guys. Back with another video later in the week. Take care.